Hi, good afternoon. Welcome to the marketplace. Coming up, favorable investor sentiment drives performance of Ghana Stock Exchange as 5 stocks top price gainers in the month of August. Also coming up, commercial banks reverse decision to boycott participation in the Cocoa Bills exchange program. Plus, days after implementation of the cylinder recirculation model by the National Petroleum Authority, we'll discuss what it would take for the program to succeed. My name is Daryl. Kwawu. Details coming up. Stay with us. And first up, favorable investor sentiment across all sectors drove performance of the Ghana Stock Exchange in the month of August. According to the summary of market activities, the GSC Composite Index surged significantly, surpassing the 3,000 milestone for the first time this year. This resulted in an impressive year-to-date return of 26.22% for investors. Here's more in this report.
The GSC Financial Stock Index also experienced an uptick in the past month, reducing its year-to-date losses to 14.44%. The top 5 price gainers for the month were Société Générale, Total Energies, Standard Chartered Bank, BOPP, and SIC Insurance. The volume and value traded increased substantially by 163.34% and 581.62% respectively compared to the previous month. Meanwhile, the Ghana fixed income market also ended the month with 5.33 billion in volume traded, a marginal decrease of 3.68% compared to the previous month and a 66.04% decrease from the same time in 2022. 91.76% of activity on the market was made up of trades in short-term government securities.
Well, on Zoom with us, Head of Research at Databank Group, Alex Boyne. Good afternoon to you. Thanks for joining us. What is driving this favorable investor sentiment?
Well, thank you, Daryl, and to your listeners. First of all, I think investors are favorably reassessing the rates in the equity market. Against the backdrop of what we have seen in the past year with regards to the turbulence in the fixed income market. So I would say that is the key point that we have to, because hitherto investors, particularly fund managers, pension fund managers, have been overly defensive when it comes to managing their portfolio. So they have basically, investing in fixed income securities. And by given what has happened and with the DDEP and impacts on their funds, I think they are currently looking at the equity market favorably. And I think that is, in my view, the main driving factor behind what we are seeing on the market now. The economy appears to be improving a bit slowly. We've seen, I think that the general expectation is that if you look at the key economic indicator, which is the exchange rate, the general expectation is that the dollar seems to have peaked around 12 cedis to the cedi. So many investors think that, look, this could be the best time to actually come into the market. And I think all these are playing out favorably for equities. But Daryl, I must also highlight that the market has returned roughly around 26%. But most importantly, there are certain sectors that have not performed well. And in fact, the gains are basically driven by some handful of stocks that are mainly within the non-financial space. As you know, the Bank of Ghana issued a directive for banks to halt their dividend payments. And I think that is impacting negatively on the banking stocks. So what we've seen so far is being driven by non-banks, especially those that have solid fundamentals that consistently pay dividend. That is what is currently exciting investors. So if you talk about Total, if you talk about Bob and MTN, those have been the leading light on the market so far this year. So good, the return is good, but I would say that it's skewed towards some few stocks. In fact, when you look at the market generally, we've just had about 7 stocks that have appreciated in value. And we have, I think, around 40 stocks that are listed on the Ghana Stock Exchange.
Well, I also want to ask you, because we've been reporting that for the first time this year, the GSE Composite Index surpassed a 3,000-point milestone. How significant is that?
Yeah, that is quite interesting, Daryl. But I mean, of course, the market has been undervalued or has remained undervalued for some time now, and it still remains undervalued. So even though it crossed 3,000 points, as you rightly mentioned, it is still below its 10-year high. For example, the market, in the last 10 years, the highest point that it reached is about 3,489 points. So even though it's still, we are happy for what is happening, but I'm saying that valuation is still below historical levels. And going forward, I think if the economy continues to improve, we are likely to see some of the banking stocks, because for the past few weeks, we've seen some interest in Standard Chartered Bank, GCB Bank, and some of the few banks, especially SG, which has been the leading light in the banking space. Surprisingly, it's returned about 20% so far this year. And that was ostensibly due to the fact that they had quite relatively smaller exposure to government securities. So their recovery in terms of profitability is a bit better than the other banks. It's relatively better. So we've seen SG gaining about 20%, which is which for us, I think, is a good news for the banking sector. We've seen Standard Chartered also recovering. So we are likely to see some recovery in the banking sector, and that will help propel the market performance going into the rest of the year. But I must also highlight that there's some inherent risk that we have to be mindful of. Some of the stocks have actually doubled in prices since the beginning of the year. You can talk about Bob, you can talk about Unilever, and even Total Petroleum. So investors could begin to take some profit. And if that happens, that is also likely to cause some price drops in these stocks, and that could weigh down on the stock markets generally. But I think the general feeling is that the positive is looking up.
Yeah, you mentioned earlier that the performance is skewed towards non-banking stocks. And so my question was going to be, for investors, based on this information, if I was investing in banking stocks, whether or not it was appropriate at this point. But then again, you also mentioned that you anticipate some recovery in the banking sector, and then that could impact on performance going forward.
Yeah, sure. But what's the question? Can you come again? But
so I'm asking, for those who are investing in non-banking stocks, seeing their performance, what do you do based on this information you're sharing that the performance is skewed towards non-banking stocks?
So for sure, I think the reason why we have seen the interest in the banking stocks, the non-banking stocks, is basically because of the impact of the DDE. In our market, most investors invest for dividends. And once Bank of Ghana put out these directives to suspend dividend payments, even within the non-banking stocks, we saw some very few stocks that are sound enough to be paying dividend. Those are the stocks that are attracting attention on the market. As I mentioned, you can talk about Total Petroleum. The interesting thing is that the market view a company like Total Petroleum as a defensive play. What it means is that they are very stable company because their profitability relatively is able to withstand economic shock. As you are aware, the OMCs actually are able to pass on costs to consumers every 2 weeks or so. So that actually helps them to cushion them from some of these shocks that we see in the economy, and that places them also favorably among investors.
Is this positive trend we've seen in the month of August sustainable? What is the outlook for the rest of the year? Are there any threats that could drop back the gains made so far?
Yeah, it's possible, but for us, we think the market has performed beyond our expectations so far, and there's the risk that some investors may want to take some profit in some of the stocks that have possibly returned over 100%. As you know, some investors are not so greedy. Let me put it in quotes, and they want to take profit. And if we see this trend happening, we could see some sort of correction in some of these stocks, and that could possibly weigh down on the market. But as I mentioned earlier, the general expectation is that we should see the market actually continue attracting interest because of the stability that we are seeing in the economy, and also the banking sector. I think investors are looking at the banks on their own merit, rather than looking at the fact that government has really suspended dividends. Banking stocks are not looking attractive, but some of the banks have proven that they can manage their asset very well, prudently. As I mentioned, you could see SG, Societe Generale Bank, has demonstrated that, and many of the banks have also done that. So it tells you that, even though the impact of the debt exchange has weighed on banks' profitability, but they are recovering, and its impact also affected the banks at various degrees, you understand, depending on the level of exposure that a particular bank has with government securities, you understand. So those are the factors that possibly investors may look at assessing them on each bank on their own merit, and then placing an investment or making an investment decision based on that, rather than putting all the banks in one basket and then say that, Ghanaian banks are not good. Because we believe that, they are still pocket of value in the banking sector that investors can really take advantage of.
Okay, thank you so much. Very insightful there. Alex Boyne, he is Head of Research at the Data Bank Group. I appreciate your time with us this afternoon. Great to speak with you. Now, in other news, commercial banks have reversed their decision to boycott participation in the Cocoa Bills exchange program. This is after they managed to secure some release from the Bank of Ghana to support the operations. Here's more in this report.
Commercial banks in the letter to Cocoa Board pushed for their participation in the Cocoa Debt Exchange Program to be put on hold. This was after it failed to secure the reliefs that it got after it participated in the first round of the Domestic Debt Exchange Program. Commercial banks had maintained that signing up for the program put a lot of pressure on their operations, and therefore they need these reliefs to stay in business and not breach any regulatory requirement by the central bank. Some of these banks had even argued that this development will force them to withdraw funding for the Cocoa Board activities going forward. The commercial banks in the letter to Cocoa Board pushed for their participation in the Cocoa Debt Exchange Program to be put on hold. This was after it.
You're watching The Marketplace. Let's bring you some more news. It's been a week since the implementation of the cylinder recirculation model by the National Petroleum Authority. The initiative seeks to centralize the distribution and sale of LPG in the country for domestic consumption. It also allows consumers to exchange empty cylinders for a filled one at a specific location. It is running alongside the old system, and here to give some perspective, energy strategist Dr. Yusuf Suleimana, also CEO of energy consultancy firm Eureka Solutions. Good afternoon to you. What would it take for the cylinder recirculation model to succeed, do you think?
Yeah, thank you very much, Daryl. Good afternoon to you, and good afternoon to you.
Okay, Dr.
I had the news. Yes, Daryl, can you hear me?
Yeah, you froze a bit. Carry on.
Okay, sure. Yeah, so thank you. So we've all heard the news that government has taken this giant step, to implement this program to the effect that, the cylinder recirculation is coming to stay. The implementation has started off a sort, though in preliminary stages. So what will it take for it to succeed? I think a couple of things. Number one, that it will require extensive stakeholder engagement, where all the parties that are involved, they have to know the role that they're going to play. And I think in this regard, NPA, they are doing creditable work. I think quite a week ago, they engaged some of the CSOs, which my organization was part of it. And I think yesterday also they managed to take, some of the guys around some of these facilities that is coming to some of these facilities that they are introducing into the value chain. And so it is important that these stakeholders understand, the dynamics of this cylinder recirculation. So if that is done and done well, I think that gives the chance for it to succeed. And number two, also, I think it should be able to close the inherent gaps that we have in the old system. Indeed, we do have some gap within the old system. And again, those gaps for me relates to issue of safety. I'm not very much comfortable with some of the outlets, especially the LPG refilling outlet. There are a lot of pertinent safety breaches that are pertaining there, which I always call like potential time bomb. And so if this policy is able to solve that, I think it will stand a chance to succeed. And finally, I believe it stands a chance to succeed if it doesn't lead to escalation of prices. Remember, we are introducing a lot of value stream into it. And so one may be asking who pays for this particular value stream. But I always think that, if you are introducing a policy and you are introducing value streams, if the value streams are able to generate enough profit, and then you can manage it such that you don't pass it entirely to the consumer or the end user, then that should be, it should stand a chance to succeed. Because the last thing we need is to have escalation of prices as a result of this policy. And I'm sure the regulator is quite aware of this, and they are also working around the clock, of course, to ensure that as much as, we champion this policy and we believe it could be an excellent policy if well implemented, we might be also mindful of this potential setbacks which could roadblock the policy. Daryl?
Well, you sort of touched on this a bit about this program closing the inherent safety gaps in the old model. How exactly? Yeah,
so if I talk about the inherent safety gap, Daryl, if you look at the industry, both the upstream and then the downstream, what we don't compromise is issue of safety. And if you understand the fire triangle, where we have three basic things that will come to play for any potential explosion to happen. We'll have the hydrocarbon cycle. So if all these things come together in the proportion, then we're going to have ignition happening. And that, if you visit any fuel outlet, I'm referring to the LPG outlet, all these conditions are met. What's required is just a spark. And there's a lot of safety bridges that are pertaining, which we have sent a lot of recommendation to the regulator, and I'm hoping that they will swiftly implement them. Because I'm saying that because they plan to run this policy alongside the old model, which is an excellent thing, so that we'll be able to measure the efficiency of the old model and then the new model. And I can tell you that if the new model is efficient enough, consumers will rather just gravitate automatically. They don't need to wait for 3 years. So I just call on them to ensure that all potential safety breaches within the old model, which I just mentioned, the fact that if you look at the way they refill it, the potential source could be the car exhaust, and the cars are still coming, with the exhaust to fill within the proximity of the area, which is quite a dangerous thing. So what the policy will do is that I think, in my opinion, it will segregate the consumer interface with that hydrocarbon, because you just take your cylinder, you go and then pick it up. You are not in any way in direct contact with the filling outlet or the processing facility, in which case where the old model is. So if they are able to do that and streamline it well, and of course it could inherently reduce drastically these safety measures associated with the policy. And finally, those who have been in the industry, you notice that safety affects four fundamental core areas. We have what we call PEAR, and we call it the P stands for people, E stands for environment, A stands for asset, and R stands for reputation. Among all this, if there's any safety breach, it impacts this rating. And you know that what is interesting is that the people is what is rated high. But at the end of the day, if there's a safety breach and there's a fallout, people can be replaced. Environment, they can do some mitigations. In terms of asset, they can easily replace it. But I tell you, reputation is very difficult. It could take many, many years. And that's what I want the businessmen and then the regulator also to put the mind on. Why safety is very paramount. We cannot champion the policy with safety breaches that would inherently result into maybe a potential explosion of high proportion that we cannot carry. But I believe that with this kind of measures that the government of Ghana through NPA is putting in place, a lot of this one should be able to be kept. And I think a lot of organizations, including Eureka, have sent through a lot of proposals regarding how this can be done and done smoothly. And I think the key thing is the engagement. And while they engage well, we should be able to solve these things.
But there are still outstanding concerns, right? For instance, we expected the LPG marketers to release a statement to the effect, they've raised some issues. Any other concerns you may want the MPA to address as it rolls out this program? Do we have you on?
The key concern is what I mentioned first. Yeah, I'm not sure whether they've done enough, sensitization. I think it's still ongoing. What I would urge them is to stay the course on the sensitization, and they should open up to all ideas of all manner of angles, because it's very important, especially those already in the chain. They have to engage and let them allay their fear. That's all. Because every single policy that is coming, there's that perception that it's going to knock off somebody within the chain. So it is left for the regulator to do, sensitize the people, sensitize the business partners and the existing players within the stream, that they are not going to lose their job, that is not going to impact them in negative in any way. So what I will urge is that it's good that the two policies are running concurrently, so that we can manage, we can be able to assess the efficiency of the old model vis-a-vis the new model. And so I always say that if the new model is excellent enough, I think people will automatically transition to. If the new model is good enough, people will automatically transition, without any compulsion of any sort. But I think stakeholder engagement is key. And I would just encourage the regulator to stay the course. What they have been doing is excellent, but they should stay the course and open up for all manner of engagements. They shouldn't get tired, because this is a nationwide policy that has to have high acceptance rate. If that is not done, I think it's going to be a huge problem. Yeah.
Dr. Isi Sulemana, Energy Strategist, also Chief Executive Officer of Eureka Solutions, and energy consultancy firm. Thank you so much for your time. The International Advertising Association's Africa Rising Conference hosted some of Africa's most influential marketing communications professionals and has come to an end in Accra. The conference saw a series of speakers deliver presentations on how African businesses and brands can take advantage of current evolutions to deliver value. Here's more in the following report.
Final day of the Africa Rising Conference hosted some of the globe's most influential marketing communications professionals. The annual conference discussed key areas African brands can leverage to boost growth of African businesses. Independent marketer Yao Nsako charged marketers to convey narratives which will spur the growth of the continent.
All power is tempted by the abuse of power. Therefore, marketing must develop strong values and ethics and principles that guide it in what it does, and not just succumb to chasing short-term profits at any cost to society to make shareholders happy. We are faced with a battle between degeneration and regeneration as marketeers. If we are engaged with the people, we must stay on the side of regeneration to secure the long-term health of society. More liberty, more egalitarian opportunity, more fraternity.
Past chairman and world president of IAA, Joel Nete, called for effective marketing to grow tourism revenues.
If there's no concerted effort to send out a particular message, we are missing an opportunity. Even around tourism, look at our beaches, look at our various tourist destinations. What are we doing? When you get into a particular tourist destination, is there an ecosystem that's built? Is there somebody there who's selling memorabilia? Is there somebody there who has a restaurant that people can benefit from? What are we doing around marketing? And these things are not rocket science. We see them everywhere. Even if we can't originate them ourselves, we can copy with pride. So if your question is, are we doing enough? No. Without a doubt. We're not doing it. I don't think we've even scratched the surface around the things that we can do with marketing to better the lives of our countries, to better the lives of our people, to better the lives of products and brands.
Now, entrepreneurs have been entreated to devise strategies in adapting to changes in their business environment and rebound after they experience adverse situations. Founder of investment firm done by Ghana, Ken Wellington, explains that entrepreneurs should take keen interest in capacity building initiatives to support the operations. He spoke to Joy Business at a pitch competition of the African Street MBA Accelerator Program.
The program is a special entrepreneurship initiative designed to provide integrated business supports for startups through capacity building, mentorship, business development services, and funding for young entrepreneurs. A total of 15 accelerators pitched the ideas to a panel of judges for a grand prize and a business development roadmap. Speaking at the event, Chief Executive Officer of the African Street MBA, King A. Wellington, said the organization sees the need to support SMEs economically to cushion them for the competitive market globally through monitoring programs.
Now, African Street MBA seeks to empower young businesses, entrepreneurs from poor background and those with low education, give them opportunity by deepening their knowledge when it comes to business management. And of course, that's why you see the name has street in there. And the MBA in there has to do with the fact that we are training them based on top MBA.
In all, 4 entrepreneurs came tops and obtained financial assistance from the African Street MBA after pitching their business for support. Raman Samira and Patricia Benemba are first and second runners-up of the competition.
Said in my pitch, I wanted to be the leading exporter of Ghanaian branded smokes, kente, and then beaded products. That dream will come true.
Yes. Thank you very much. Competing globally and looking at my markets, looking at how to get it out there. I'm sure with the help of the social media branding, rebranding, my business will go out there. Yes.
Speaking to the media after being adjudged winner of the competition, Nicholas Donko, an IT specialist, said his disability was never an obstacle. He further disclosed that the Africa Street MBA will help his IT company provide IT training and employment for the youth in the area.
We winning this award, we are going to use it well to expand our business, to train more people who are not employed to get their own employment, and then most especially my colleague persons with disabilities.
And that's inspiring, isn't it? That's the marketplace. Thanks for watching, everyone. More news on our website, myjoyonline.com/business. More from the Africa Rising Conference. Marketers must focus on regeneration to promote societal health, according to Yao Insako. Also, one more story before we go. Vodafone launches 4G for improved network connectivity. Yes, that's the story over there. myjoyonline.com/business. My name is Daryl. Thanks for watching. We will be back same time tomorrow.